Good morning, everyone. Let's get rolling here. Short week. See what's going to happen. Usually positive. After last week's nastiness, we'll see. There we go. All right. So let's start out with Bitcoin. It should be getting close to its destination. That's a hell of a move to the downside in a short amount of time. And what do we look at? Why do we determine that? Well, we always look to the left. Look at the weekly chart. This is a significant area that it rallied from in April. And there's a little congestion there. Let's scoot it over a little bit more, and you can see all the overlapping bars from 2024 in that area. So it's pretty significant that it holds here, even though it might overshoot that low, which often happens. And it's a whole number, so it's not ready yet. You can see on the daily chart. This is if you didn't check out the chart of the week, I wrote exactly about this because this is something that we do pretty much every day from different time perspectives, meaning from an intraday time perspective every day, not so much for swing trading. It depends on what's happening on the weekly time frame. But here's a weekly time frame of Bitcoin. It's coming down to an area which is marked off. And then we look for what I wrote about was the transition from red to green, meaning as it's coming down in the higher time frame, you got a red candle, and this one is just beginning. And you anticipate that it's going to make a turn. You don't wait for the green candle in the higher time frame. You move down to the lower time frame and you look for those clues, meaning like this, some anticipation of buying. Then we'll see what happens today. And if it dips down again, we look for the things that we look at every day, 180 reversals, breakdown failures, whatever's going to shape up to give us that insight into the lower time frame. So we're done with the higher time frame, not interested in that anymore. Now I'm looking for the transition, if that's in the cards. And so that when it's at support, that's the thought. Right? If this is a red candle and it goes down another day for whatever reason down into here, well, we just continue to do the same thing. Right? We just go down to the lower time frame and we look for those clues. And as day traders, we look at daily time frames and we could then go down to 65s and fives and what have you. So that is the essence, but I give you some details. So check out that chart of the week. All right. Where are these markets at? Well, let's start from here. Crude oil. Not much happening yet. It just keeps jiggling around here. You know, I'm interested in this to a certain extent because of the way it came off of the low. And has just been unable to get anywhere. So I'm not interested in doing anything with it. And a lot of the energy stocks and ETFs are just whipping back and forth like this. So, sometimes they're the place to be. Right now, it's not. The Russell had a great turnaround day on Friday. It didn't come down to the pivot, which is, part of our just continuation of what we do day in and day out. You see a red candle like that, and it's getting close. Okay. So you think it's going to come down here. And then you go down to lower time frames. Better to look at IWM. I use that as one of the examples in the chart of the week. And you see it's big down bar down here. Now, for example, in the green room, we still think the same thing because of the down candle. Okay, it's going to come down here. But you come down and you see, okay, momentum is stalling. It came down really hard. One of the concepts that we talk about is the wide range bar being the weakest link because it creates a void. So then you go down to your 5-minute time frame and you look, hey, it's not going down. It's not going down. It's not going down. It's breaking out. So you have to be flexible. And I'll use the analogy as tools. The tools we use in the method give us that flexibility to recognize what's happening. And especially as a day trader, if you don't recognize what's happening and look at it objectively, you can't participate in a counter trend move. Right? So that doesn't mean this is over with and it's going to go up. Maybe it does, and it's up here pre-market a little bit. It's just, it came up and it's just going sideways here. But we'll see what's in the cards. This Thanksgiving holiday, things are usually positive, and Thursday may have been a little bit of a washout, but there isn't any really strong evidence of that across the board. So the Russell outperformed, and every time there's an anticipation that the Fed's going to cut, money gravitates into this, and when it's like maybe they're not, it gets killed. Yeah, Robert, they've been all over the place with that Fed tool. The Fed tool's a nice thing, as far as however they look at the anticipation of the Fed cutting or not. But this year, there's expectations of rate cuts have been really wild. So this is, besides I'm not saying you shouldn't use that CME Fed tool. It's a good tool to see, and it anticipates into the future. But this, I've used over decades, and just looking at the 13-week Treasury yield, you see, it moving down like this. They're going to cut, when they've done some cuts, and now it pops back up. And on a short-term basis, on a short-term basis, it says, hey, they're not so sure. It's like a breakdown failure. We look at this the same way we look at any stock or ETF or futures contract. It accelerated lower. That means that there was wide anticipation of it doing that. And see, I cannot get it. Log into the member area. There's a new code. When that changes, you got to go into the member area, Thomas. You can't get into the room. You got to. I checked the link. Hold on. Let me try and help. Did you go to? Let's see here. That's not it. Should be able to log. No reason you can't log into the website if you're going through the member login link. See, it's spinning there for some reason. All right, let me finish here. We'll see what's going on. People are definitely in the room. Oh, I see. It's logging me into log me all the way into the member area. That's why. Let me log out of there. Anyway, you can see here how this popped down. So, they're not so sure they're going to cut. It moves down. Yeah, they're thinking cut. But the tool, definitely use the tool. But you can look at this. It's always gave us a heads up as to they're going to start cutting or increasing rates. And it's available to everybody. So interest rates, move down. We were concerned last week that they were going to break out above here, but they didn't. So they just flip-flopping around. That's not telling us much of anything. And look at gold. Might be getting ready. Set an alert. Set an alert above here. You see it's retesting this area and the rising 50. GLD, yes, GLD set an alert. GD, GDX or GDXJ is the leveraged one. This is the gold miners. So it appears to be bottoming on the 65 minutes. So here's an example, red bar down into a pivot. Maybe it's going to transition and turn up here. You know, exactly what I spoke about and what was in the chart of the week. You know, take a look and see this is bottoming out. It could be a transition day. Gold's not moving, but you know, there's my thought on that. Right. And let's go look at the cues. So this was not much of anything as far as retracing into Thursday's big down day. It'll take a few days if it's going to retrace up from there. We may just be in a trading range for a little while, or down to the next level. I mean, it's one or the other. So the idea is it going to be a 1, 2, 3, or is this a bottom, a low point here? And we've got this, you know, going head and shoulders top there, and it broke below, and that has bearish implications. But we need more information before we're ready to become more bearish. And during the holiday week, maybe this can retrace up. Look, even if this can get up to 600, get back up from here to here, for us as active traders during the day, it's something we can take advantage of. And there's the spiders. Similarly, and you can see the same rounding top, wide range down bar into that October 10th low, which was a nasty day, and stabilized Friday. So far, just kind of chopping around, but it could retrace. That's really the essence of today, to see if this can break out and get above there. Let's look at the 5-minute from last week, and so it's up. Let's go back here a second. You know, it's up near Friday's high. So it's going to gap up near Friday's high. What we want to look for is to see, you know, it's not a significant gap, but does it pull back where we get some kind of a buy setup? Does it hang out up there going sideways, which we could then buy a move higher? And we'll wait and see how this shapes up as always. You know, just things have been volatile in the open, so some kind of a breakdown failure would be a good signal where it gaps up and attempts to go down and flips right back up again. And so I'll be looking for that. So we're always looking for, you know, what candles form at the open, groupings of candles, and how that all plays out to take advantage of it from, you know, the point of view. And you do the same thing with, you know, stocks. You know, it doesn't matter what you're trading; it's just all the same stuff. Um, Artificial intelligence, you know, it's been in the news. Right? Bubble, bubble, bubble. Obviously, a lot of people believe that a bubble, or hey, they just been overplayed, and we can see that when we see that kind of an acceleration. So you want to keep an eye on this, because at some point the AI bubble, as they use, that is not, in my opinion, burst like 1999, 2000. This is something that, as it pulls back into wherever it's going to settle down, this would be a good place to put some money. All right, so peer, check SPX, the numbers that I've already put in here. Let's drag this down, 6,500. There's the put strike. Let me just double check that. 45, that's still the same as it was before. And this is still the same as it was before. So call strike, put strike. It's on major support. It's going to open here. So that puts it, as eyeballing it in the middle of the ranges. And like most days, it's unlikely to get to either one. of those levels. And this is on the other side of a whole number, on the other side of a half number, and this is below, right, the half and the whole number. So good levels, and we'll see where it goes from here. Right. ES, major void up. Well, yeah, wide range bars. Um, there's your futures contract, and it's up at resistance. And you see the 65-minute is there. So yeah, they got room to go up. And that would be quite impressive. Hey, wouldn't it be impressive to see if this broke out that it could go up toward the high of Thursday? And while, yeah, that would be impressive if that was to happen, that would not totally negate this move down. It'd be a hell of a good start. We'll be watching, right? That's what we do. We see what is, right? The Qs, this is ES. Down here, it's got room to go up. And the Russell's already made a move, so we're not interested in that. Here's the Dow, not quite the same void, so not as attractive. Yeah, we looked at, right, there's the Qs, and I think the Qs might be the best bet. Um, it's tight up here. See, it's tight, get tightening up, and I think money will tend to come back toward the usual suspects that we'll keep an eye on. Yeah. You know, and so what is Nvidia going to do? Right, it's down here on that major support. Are they're gonna start, buying this? And there's a lot of hurt put on a lot of these stocks. Look at Microsoft, ready to come down to the 200. Uh, Amazon gave back everything after the earnings gap. That's on major support. So it would make sense that money would come into some of these not so magnificent lately seven stocks. Meta's been decimated. It's kind of bottoming out where you got several days down there. And these are probably worth keeping an eye on as far as equities go. If money's going to come into some of these beaten down ones, and Apple's held up tremendously, and Google, that's a all-time highs. So that is the institutional favorite. All yours, Dan.
Did you say you're done?
I did.
All right, didn't hear you. All right, good morning. Let's go through alarms here. MCK alarm. Yeah, Greg, a couple people are emailing us, having trouble getting to the green room. Makessa, my up alarm went off. Just a breakout, strong sector. FedEx. This was a.
You're not showing charts yet.
Oh, shoot. You're right. My bad. All right, FedEx. Put spread idea. I had an alarm go off, but now I see it coming back in. I was just showing you MDT. No, it wasn't MDT, it was MCK. And breakout, gapping up. I'll see what it does at the open. ATEC. I had an alarm up here go off. But we always talk about potent turns. That is such an important concept. Because until Friday, yes, it's a consolidation and an uptrend, but I had zero confidence that it would hold. And then now, based on Friday's range expansion engulfing bar over Friday's high, is a go now. Friday's high, Friday's low. What's your setup? This thing, BDN effects. Oh, what's wrong with my 15-minute chart? All right, that is a wide range closing breakout. Looks great. Let's say so, Greg. Here's an example. You know, we always have this talk. You know, we have been lately about look. Thursday was a breakout and close with a topping tail. So since this is such a definitive closing breakout, I labeled it as go ahead and enter after the closing price. There's like no reason to wait for it to take the high up. That's such a definitive bullish close. And the reason I say over the closing price is just to make sure it doesn't have a stupid bearish gap down, is why I don't say, oh, just buy it at the, just buy it at the open.
You might watch the AMS course.
Okay, about what concept?
The advanced money management course. And you won't have hesitation about you doing those.
Wait, no, but let's go back because I'm not following the point you're making.
Your comments about the wide range bar.
But I'm confused what concept you're telling me. I said it's good to go. So I'm not, I'm missing your point, and it's an important one.
Your hesitation about, I know you're saying that, but your words, your tonality is like you're not so sure.
No, it's quite the exact opposite, Greg. I said there's zero reason to wait to take out the high. I said that's why I labeled it in the letter over the closing price because it's good to go.
Okay.
So that's why
I mean, it should be like a non-discussion, but go ahead.
no, the point I was making, Greg, is there is no need to wait for it to take out Friday's high. I want to get in it earlier. So what does earlier
You
mean?
could have bought it Friday.
I will know shit, Sherlock, had I seen it. You gave it to me over the weekend, and I liked it. So no, we're in agreement that the pattern is there, and we're just talking about how aggressive to get on board. And I'm saying aggressive meaning over the closing price. All right, so that's why I wanted to clarify that. All right, yeah, with we're going to be watching all these Bitcoin things. I had an alarm on that go off this morning. Climbos everywhere, and then the usual suspects of the stocks. You got Coin, Hood, Mister. They're all. This one is the most cooked, but it's still weak. When my alarm went off, so let me reset it at 176. Mister. Wow, I had my last alarm was one. Oh, it was 180. That's not far away. That's not far. And then you got WIGME as the ETF for the miners, but those still have been new. And UE. So here's another one, Greg. I'm agreeing, just like that other one. It's a beautiful range expansion closing breakout. So here's another one. This one might have been so friggin' close to the high. I think I said wait for it to take out the high, but we can even watch a controlled intraday pullback to enter, which would be Greg's topic he told you about earlier about buying the turn, which would in this case it would be when you get pullbacks into these, it's like we're trying to enter at the low of the inside bar, anticipating a 1, 2, 3 close. So this one and the or BBNX. They're both beautiful closing breakouts. Yeah, if we can get on board at a better price, sure, sure. Just a couple earnings here, nothing really. WRD 790. Yeah, that's a climb up with a retest. That's worth watching. We ride. Yeah, I remember when that stock came out. I think it's where you put your car in a pool, not a swimming pool, but a rental pool. People drive, way of making money on your car. A Lima X-ray. I'm getting up a little, but nothing. No volume. I should have deleted you already. And light volume. No pattern. Not gonna waste my time. Carvana was not earnings, but it got an upgrade. And guess what I did? I did not set an up alarm because it's junk. This is a 123. I set a down alarm at 314. So if this gap up gets negated and this starts getting weaker, then that's a great short and or call script. SWKS alarm. Put spread idea, climb up. Delta alarm. That's a buy setup with a 180. So it's actually a 3-bar turn here. So this could very well be a beautiful 30-minute high entry. That I like. Put that in a window over here. I don't need this. Yeah. Let's put delta there. TBPH alarm. That's a bull rectangle. That looks great. It's a bio. So you can consider buying call options instead. Thomas, I see your note now. Aluminum. It's also a bull rectangle. It's sloppier than the one I just showed you, right? Sloppier means the whips. But it's a watch. Put it on the list. And you say WGS. That's run too much here from $1.25. So you need a pullback or consolidation. I like your aluminum better. Although I like mine. I like this bio better. House. Well, that's just a new alarm. House. That's a nice 180. TBP. This is one I said I like this bull rectangle. Oh, good. The alarm. I'm going to reset the alarm because now I like it better. I love entering bullish trades when I have a small little red bar ignored in the morning. And that's exactly what this would be if it triggers. So that looks great over Friday's high. Yep, FedEx. Okay, FedEx. I'm going to reset the alarm. This was a put spread idea. SPMT alarm. I don't remember that one. Yeah, it's a sloppy bull rectangle also. Sam, that might have been your list. I forget. But that's a sloppy bull rectangle, but it's bullish. All right, FedEx just hit, so that was not the put spread idea. GDX. I had a little up alarm, nothing to do. We're already in it, but nothing to do. All right, MCK. Let's do Well, we can do 5 minute high. We have extremely light inventory. Oh, Q's popping here, so I immediately look up at my fangs, and a lot of them are ripping here on the 15-minute charts. Apple, Amazon, Netflix, Tesla. And then I look at SMHs, Nvidia's flat. SMHs are actually moving more than Nvidia, which tells me Nvidia is lagging. Yeah, PD Duck. Yeah, sorry, Greg's looking into the green room access problem. I know Don sent me an email and Alex. Yeah, we just unfortunately we just gotta periodically change that. Remember Expedia from last Friday? That still looks great. That could be a day trade, you all. That that's a nice 15-minute chart. Delta. Okay, so perfect. Delta is another one that now I would like on 5 or 30-minute high, whatever. I'm gonna set an alarm at 38.65. All right, yeah, this looks fantastic. Like 30-minute high, I hope. But it bobbles around until then. Ribbon. I wish it didn't have that tail on Thursday, John. But it is making me turn because now you got conflicting tails. So it's worth watching. Plug is making a turn at the 200. This thing been beat up from $24. Green spark. And EU. Oh, shoot. Hey, I just found this by accident. Well, no, not by accident. I had it on my other computer. But I actually was trying to type NUE. But that's a beautiful 1, 2, 3, 4 short. Does that volume? Nope, that's the problem. No volume. But look at that. I just found that by accident. That's a beautiful short. New Market Corp. I meant to type this and UE. So let's see where the entry was. NUE 152.67. Okay, so this one, yeah, I did make it over the high because it was so close. Unlike that other one we talked about pre-market. I'll just reset the alarm and UE and it'll be a clean hit. All right, what's that one pre-market? BBNX. Okay, so let's now do the high, 31.89. Or fifteen. So it did trigger BBNX 31. No, it gapped over it. All right, that's why I'm confused. 31.89. Diamonds weakest. I'll watch this BBNX pull back over here. Like I had MOH over there on the bottom right. I noticed that thing kept up, so I looked at the other um, healthcare people. I know Trump's kind of going after them. Look at Oscar gapping up. I don't know what's going on, but some activity. Humana still a dog. CNC gap breakout. That's bullish on a pullback. Let's check that right now. I would do a put spread. The computer's acting so sluggish now. CNC. Wow, that's a big old cave then. Because why would he agree to 2 years versus one when the Dems were only asking for one? So that something's fishy going on. Spreads are bad. 37 puts 20 by 50. But yeah, see how the charts told us something's going on? Then you just answered it. Well, I mean, there are a couple things. Agreed. I mean, it hit me too. My friggin' bill went up from 1,300 to 1,800. So you think I'm happy? That's a month. You know, when I told that to some girl over the weekend, she says, "Oh, that's not bad for a year." I'm like, "No, it's a month. $1,800 a month." But I do think, you know, the whole program is effed up. You know, and Trump's been saying, um, well, all the Republicans, I just don't want to keep giving subsidies that go into the insurance companies' pockets. And that I understand. So, which means we got a broken system. So that be the problem. In my opinion, we got a broken problem. Well, we just keep throwing money at it. That's not going to throw money at it. It's not going to fix it. As Trump said, it's making the fat cats richer. Howdy. Yeah, another bad polling thing is affordability. When you have 30, that Biden inflation and prices went up 30%, guess what? They ain't going away. Now we got 3% inflation on top of 30% price hike. So yeah, people are mad about affordability, and that's why, sentiment that I wrote it in the letter, that sentiment thing, University of Michigan thing is, I think it's at 18-year lows. So being a chartist, as we all are, right? I don't care what we're looking at. If we say, something's at an 18-year low, I immediately think contrarian. It's like, wow, rubber band is stretched.
Years ago, I did a chart of the week on the healthcare companies, the HMOs.
I remember that actually.
They were all declining. And as soon as Obamacare went live, they exploded higher.
Interesting. So then Trump is right. The fat cats are getting fat up the program.
100%.
God bless. That was our only open. Fine. Interesting picture. I never heard that, but I, I, I'm not disputing it. All right, those are all my alarms. Oh, actually,